Hey, what's up guys? It's Ezekiel here. So let me hit you with this. Most traders, they lose not because their strategy is like bad, right? But because they are blind to where the real money actually moves, right? So like every candle that you see is just surface noise. The truth lies underneath it, right? And where can you find it? In the volume profile, right? This is like X-ray vision of trading that reveals where the market, the heavyweights, are actually placing their bets at, right? So while the crowd, they chase all the green and the red candles, right? The smart traders, they are quietly watching the price zones where billions of dollars are changing hands, right? The levels that truly move the market. Because here's the truth, the market doesn't just move randomly, right? It reacts to invisible footprints, right? The better zones where the buyers and the sellers, they once fought the hardest, right? And the volume profile, it exposes every one of them, right? So today I'm going to show you the 4 exact steps to trade the volume profile like a pro, right? How to find sniper entries, how to avoid take breakouts, and finally trade with the big money instead of against it, right? Stick with me on this one, because once you see this, you never look at a chart the same way again. Alright, so first off, what is volume profiling? Now, volume profiling might sound technical, right? But it's actually pretty straightforward. So you picture the market not just as moving prices on the chart, but as layers of activity stacked at each price level, right? So instead of asking, okay, where is the price going? You start by asking, how much business is being done at each level, right? So that is the edge, because it shows you where the big players are actually interested in, right? So now that brings us to the first step, which is the heart of this tool, the core of volume profile. All right, so unlike those volume bars that is typically at the bottom of your chart, correct? The volume profile is actually different. The volume profile, it stacks the information on the chart itself vertically, right along where all those price levels are. So it doesn't just tell you like how much was traded at a certain period, right? It shows you how much business was done at each exact price, right? So this is like a shift in perspective, right? And this shift, right, changes everything, because now you can see where the real battles actually took place at, right? So when you notice a thick cluster, this is known as what? A high volume node, right? So it tells you that the traders were heavily involved at that price level. So the buyers and the sellers, they both stood their ground there. They were fighting hard at that level, which is why there's a lot of volume, right? Heavy volume at that level, right? So now, when price comes back to that level, chances are the fight would then reignite again. Because why? A lot of traders are looking at those levels. A lot of buyers like, okay, this is a place to buy. A lot of sellers also like, okay, this is a place to sell, for example, right? So that's why those areas are high volume areas, right? So now, this gives you what? Your entry or exit opportunities. Alright, so now on the other hand, a low volume node, right, is like an empty space. So price often cuts through those zones quickly because there's no real resistance or support at those areas. Alright, now, so within this picture, it lies a value area, right? The range where roughly 70% of the trading they occur, right? So think of it like a what? Like a neighborhood, right? Where the market spend most of its time at, right? So inside that neighborhood is the point of control, POC, right? The single price level where activity was at its peak, at its highest, right? So this is the market's favorite price, right? The level that carries like the most conviction, right? So now understand this 3 P's, right? A value high area, right? A value low area, right? And the POC, which is the point of control, right? And then you're going to start reading the market in a way that most traders, they never will. All right, so now every powerful move in the market, it has a starting point, right? So that's exactly where the anchored volume profile, it shines, right? So now this is your second step, anchored volume profile in action. Hey guys, Ezekiel Chiu here. So if you are a crypto trader, you would have heard of Bitunix. So Bitunix is a global crypto exchange that is built for speed, flexibility, and precision. So you can trade what? Spot, futures. They also have Bitunix Earn, where you can make extra income through your idle funds. Now, here's what makes it stands out. Bitunix offers optional KYC. So you can trade and withdraw up to 500,000 daily without identity checks. So it is also the first exchange with a 16 chart multi-window trading system. So this allows you to track 16 pairs live from one screen itself. Now, security is also rock solid with its cold storage wallets, a $5 million protection fund, and a 200 million reserve pool. So now, right now at AFM, we got an exclusive campaign bonus for you guys. So check out the exclusive promo with Bitunix in the link below. Right? The beauty of anchoring is precision, right? It's so precise. It gives you the precise entry area, right? So instead of seeing the entire market noise, right, you isolate, you separate a specific move, right, and its core activity. So this lets you track how much energy fueled that potential swing upwards or downwards, right? So when price later returns to one of those tick zones, that is your clue, right? That's the market remembering where the conviction it once lived at those areas, right? So now, you don't just use that, you pair this up, right? You pair this reading with what? With your price structure, right? With your support, your resistance, right? And then you're going to start seeing these zones. They actually, once this starts stacking up, it actually means something really strong. Okay, so now, when you add those zones, right? When you stack up those zones already, right? And they line up with the obvious, for example, swing points or reversals, right? These overlap zones, right, are what we call as a quality zone, right? So they are no longer like random levels, right? They are built on what? Both market memory and structure. So the more overlap that you find, the stronger the reaction, the potential it is going to have when price comes to those areas. All right, so now every high quality zone is going to be like what? Like a magnet. So imagine it like a magnet, right? That is strong enough to pull price towards it, right? But it's also tough enough to push price away from it, which is why that would then become your strong entry or your strong exit area. Okay, so now that you have mapped up the picture with anchored volume, now it's time to zoom in where the real action it happens. All right, so now, especially for short-term traders, right? We need to be really precise in the market, right? So this is where the third step comes in, the session volume profile, right? So this is a tool, right, that's designed for intraday traders, right, who loves those quick and those calculated moves. All right, so now when you are trading the lower time frame, the session volume profile, it acts as a what? Like a daily report card of what happens during that day itself, right? So now, instead of looking at, okay, one big chunk of data, right? It splits the volume into separate trading sessions. So each session represents what? 1 day of buying and selling. So this way, you can see which prices were heavily traded on each specific day, right? And where the market truly care about, right? So every time the next session it opens, right, the profile it resets automatically, right? So it gives you a fresh map of the current battlefield. All right, so now setting it up is actually pretty easy, right? So on the chart, you search for what? Session volume profile HD, right? So then you apply it on where? You can apply it on your 15-minute time frame. So instantly, once you start applying it, you're going to see what? Multiple volume profiles stacked beside each other, right? One for each trading day, right? So every session, as you see now here, would has its own POC, right? The point of control, the highest area of activity, right? The level where the highest volume of trades they occurred for that day itself, right? So like I said, these are the footprints left behind by the institutions, by the active traders, right? They show you where the major buying or selling they actually took place. Got it? So now, here's where it gets exciting. The previous session POC, right? This is like the golden area for identifying the high probability trading zone. So when price, the current price now, revisits the level, for example, right, during the current session, it often sparks a reaction, right? Because what? The buyers and the sellers, they remember that zone, especially when it happened so recently, for example, yesterday, right? So let's say if price comes back to yesterday's POC, right? And then it forms a long wick candle. Or for example, it comes down to there and then there's a color change, right? It can represent a clean, for example, long setup at that moment in time, right? Or if price reacts at that same zone, right, but fails to push up higher, right? Then, for example, we spot an inverted wick. So that is a potential reversal point as well. All right, so now, pro tip, okay? Don't use the current day, right? The current day's the forming session, right? For your profile decision. Why? Because why? This is your current day, right? And it's constantly shifting, right? The volume profile is constantly shifting as the volume flows in. Which means what? Which means that it is unstable, right? You might see, for example, a temporary POC, right? And that later can move completely, giving you a fake signal altogether. Get it? Now let's put this area together. Picture the current trading session moving around, right? While you are eyeing yesterday's high volume zone, this is the important thing to take note, right? We look at yesterday's high volume zone, right? Then price drift back to that area, right? It touches the level, right? And then you created, for example, a long wick at a rejection, for example, a pin bar, right? Or doji, for example, right? Then we want to add one thing. We want to add the trend direction, right? So once your trend, for example, confirms the direction it is at is in line with that direction, this is like a pullback to that area, this is your green light, right? So for example, on the other hand, if a short trade, right, if a short trade rejects a previous resistance area, all right, or like I said earlier, a long trade bounces off a support area, right, this is your precise zone, right, that is grounded now with not just randomness but solid foundation, solid backing for it to push its way upwards. Okay, so now that you know precision isn't luck, right, it's about preparation, meeting the right zone. So now that you got your groundwork set, right, now I've given you all the groundwork, it's time for us to pull the trigger, right, on where it matters the most, which is now our fourth step, right? Sniper setups with the volume profile. Quick pause. If you found this video helpful so far, here's something that always surprises me. 73% of you who watches this video regularly haven't subscribed yet. I mean, if you're getting value and want to support what we are doing, the best way is just to hit that subscribe button. It's free and really helps us to continue creating better content for you every single week. It truly means a whole lot to us. Okay, now let's get back to it. So now that you have marked your high volume zones, right? You already know where is the high volume zones. The next thing is to do what? Is to make them into trade setups, correct? So here comes the art of confluence, right? As we know, it's never wise to just rely on one signal alone, right? So this is where we can add our Fibonacci retracement, right? Or earlier, we talked about, right, the key zones where you all overlay, right? For example, your support and resistance level, right? So you see where they overlap, and then now you bring in your Fibonacci retracement. All right, so when the elements, they add up, it creates a super high probability zone itself. All right, so now, if you're not confident on how to draw or use the Fibonacci, obviously this is another topic on its own. Check out my video, right, on mastering Fibonacci retracement. It's going to make this whole setup even more powerful once you stack them together. All right, so now here's what it looks like in action. We select the swing high, right? We select the swing low that is relevant to our current price. Then we are going to notice that the POC, it aligns with the what? In this case, the 61.8% of the Fibonacci retracement. Now, obviously, it can also be the other important levels like the 50% as well, right? This is where traders will consider those as the golden zone. So when price retraces there and reacts there, this is your cue, right? So then we don't want to enter right away, right? We wait for a strong candlestick confirmation at those areas. For example, like a bearish engulfing candle, right? If we are going to sell, right? Or for example, if you're going to buy, it's going to be what? A bullish engulfing one to go long itself, right? So now, once you enter the trade at that zone, the probability already increases a whole lot more. So where we're going to place your stop loss just beyond that rejection candle high or low. For example, if it's an engulfing candle, right? And then our take profit, you place it at the next structure, right? Your previous high, right? Or the low volume gaps itself. All right, so there you go. This is precision, right? Now our entry is almost surgical. If every single time you enter like that, so precise, right, with such a good risk to reward ratio, you are going to be profitable as the market goes along. Am I right to say that? Right, so now let's wrap everything up. The volume profile is not just another indicator. As you now know that I think it is time that you will also agree to add volume profile to our current trading, right? So because this is where the traders, they make their stand. All right, so now from the core concept, we learn how volume reveals the conviction at each price, right? Then what we do, we zoom in to the anchored profile area, right? So then we talk about the session profiles, where intraday traders, they reach the footprint of each day, correct? So then once we found those zones of high importance, we put it all together with sniper entries. But remember, we want to stack them all up together, right? We stack them out with market structure. For example, those POC, right? We stack them out with market structure. We stack them out with support and resistance zone. We stack them out with all the swing and high lows, for example. And then we add Fibonacci, the golden ratios, right? And then we add, right, candlestick confirmation. This is going to shoot up your winning probability by a whole lot. Good? Okay, so here's what to do next. I want to give you something that's going to change the way that you trade forever. So I've put together a free training that walks you through the exact 3-step system that I use to find high probability trades with sniper level entries, real risk control, and zero guesswork. So this is the same system that I use myself, and the same one that has helped thousands of traders go from frustration to consistent wins. And I'm giving it to you for free, right? There's no fluff, no fueler, just pure strategy. So if you ever wanted to trade with clarity and real conviction, this is the place to start. So click on the link in the description below, and I'll see you inside the training.